In today's video, I'm going to be discussing a 30% drop in stocks as represented by the S&P 500 and how they're suggesting this will likely happen before the end of this year, 2024, or possibly by early 2025. I also want to share with you the other side of the argument, which is suggesting a potential massive rally in stocks as well during this same time frame. Which one's it going to be? That's a really good question and exactly what I want to share with you here in this video because it could be any of the following and we want to look into all the details of this to see which one has the highest probability based on where we're currently sitting in the current levels as of right now in the current market. Either way, I have all those details for you here in the video. Let's get into it and discuss what's going on. First off, thank you so much for liking and sharing this video with those buttons right down below. Really do appreciate it. Thank you so much. Also, if you haven't done so yet or if you happen to be new here, make sure to subscribe to the channel as well with the big subscribe button down below. Again, thank you so much. Let's get into it and talk about the details of a potential 30% drop in stocks, where that would bring us in the markets, as well as the other side talking about a massive rally as well, right? If all of us could only know what is going to happen with the market, we could position ourselves accordingly and then make all kinds of money, right? The one crystal ball that we all wish we had, right? What's the market going to do tomorrow, the next day, the next week, the next month, right? I mean, obviously, we can speculate, we can have a pretty good idea, but we don't know with 100% certainty a lot of the times, right? So anyway, I want to break down the details of this because a 30% drop in the market right now would be, well, a couple of different things. Obviously, it would be a great shorting opportunity, which, by the way, quick disclaimer, this is not investment advice. This is not advice in any way, shape, or form, but rather I'm just sharing with you the details of some articles, information that I've been reading as of recently, and I wanted to translate that for you here in this video. So no, this is not investment advice. This is not advice in any way, shape, or form. So don't listen to me when it comes to that, okay? Just saying. Have to throw that disclaimer out there. But anyway, so they're suggesting from the current levels that we're sitting at now, we could potentially be seeing a 30% drop in stocks by the end of this year. Well, that's honestly not that far away. However, the market can drop 30% relatively quickly. I mean, think of this, for example. Think back to early 2020. We dropped massively. What was it? Like 30, 35, 40%, something like that in like a couple weeks, right? It happened very fast. It did not take long at all. So even though we might be thinking, 30%, that's a huge drop. That's going to take a very long time to happen. Not really. It can happen very, very quickly, right? So anyway, the whole point is the people that are suggesting this are saying we're likely going to see a massive and very fast rise in unemployment and basically labor, right? So in other words, the last report that we got as of recently, we're now sitting at the lowest number of job openings in this country that we've seen in over 3 years. So what that's basically saying is that employers are pulling back. They're basically saying, let's pull the job openings. We don't have any open positions right now. Sorry, we're not hiring right now because they potentially see something coming on the horizon, which would be called a recession, economic contraction, whatever you want it to be, whatever you want to call it. It's all referring to the same thing. So when we see this pullback in job openings, that's a figure that we really want to watch closely because it gives us a better glimpse into what are employers saying. What are they looking at out there? What are they observing? And why are they looking at it? And why are they pulling job openings? And why are they not hiring as much right now, right? So that's number one. They're likely going to see this continuous pullback in job openings. Now, next, they're likely suggesting we're going to see more unemployment, as in the unemployment rate continuously going higher. We continue to see this number actually moving up. It's not moving up significantly fast, but the people that are suggesting this 30% drop in stocks are actually suggesting we'll likely see significantly higher unemployment over the coming months here. Between now and the end of the year, we're likely going to see way higher unemployment than what we're currently seeing now. Now, I've seen some figures coming out. I've seen numbers as high as 6%, 7%, 8%. I've even seen double-digit unemployment. If we go to double-digit unemployment between now and the end of the year, that's going to be a massive move higher in unemployment and basically jobless claims, and we are going to be in a massive world of hurt in this economy and in this country if we go double-digit unemployment. I'm just going to say that right now. If we go double-digit unemployment, you better believe this market is coming down at least 30%, okay? That is going to be an ugly picture for the economy as a whole. But if you're in the market as a long-term investor, this is going to be music to your ears because it's giving you a much lower price point to enter into some of your favorite stocks. And hey, boom, there you go. You just got a discount on some of your favorites. So again, not investment advice. I'm just simply saying when it comes down to a lot of different things, if you're a long-term investor, this is something you generally want to hear. Yeah, bring it on. Let's bring this sucker down 30, 35, 40, 50%, something like that, so I can buy lower, right? It's not always the worst thing, okay? A lot of people look at recessions and economic contractions and say, oh, this is so bad. Who's it bad for? The person that's picking up stocks at 50% off? I'm not sure about you. I've never had a problem with a 50% discount on anything, right? I don't care what it is. I'm never like bummed that it was only a 50% discount. Man, I wish it would have been 75. Well, yeah, obviously we always wish that, right? But anyway, this is what it comes down to. Now, here's the thing. I talk about relatively often here on the channel, I talk about the jobs report and how incredibly important this is. The unemployment numbers, the jobs reports, the number of jobs being created every single month. I talk about this report often enough, or I'm suggesting this is by far, my opinion, one of the most important factors that we have to look at when it comes down to the health of the overall economy, which is if the unemployment rate's going up, if more people are becoming unemployed and job openings are becoming less and less, that just gives us a very clear sign what businesses are doing. It doesn't matter if it's a big corporation, a medium business, or a small mom and pop shop. I don't care what it is. The jobs report shows this stuff, provided, this is another big one as well, provided these reports are actually being presented accurately and not just, giving us a bunch of smoke and mirrors, right? Again, considering the time of year that we're in now, that could easily be the case as well. But either way, that in my opinion is one of the most important reports here. And as we continue to see this number ticking up a little bit, kind of slowly here, that's just giving more weight into a massive recession, called it, economic contraction, whatever. Okay. So that's kind of the argument that's out there. Now, as far as a 30% reduction, I've seen calls out there as well, where people coming out suggesting we're going to see an 85% drop in stocks. I don't know about that. If we see that, let's just call it .com bubble 2.0. I mean, that's literally what it would be, right? Remember the .com bubble from back in the 2000? Yeah, that was nuts, right? Everything came down massively, and that was like swimming in the gravy train. I mean, seriously, that was nice for a lot of people, right? if you wanted to get some massive discounts. All right. So anyway, that's one of the side of the coin. Now let's quickly talk about the other side of the argument here, which is, some people are suggesting we're going to see a massive rally. Now, what does a massive rally constitute, okay? Some people are suggesting, and again, I've seen the headlines out there saying, oh, the S&P is going to end the year at 5,700, okay? That'd be pretty high. I mean, that'd be another, what is that? Another, I don't know. It's a bit higher, whatever the percentage is now. I'd have to run the actual math on it rather than just giving you percentages right now. But it'd be a pretty big move higher for the S&P as of right now. I mean, it's not huge. It's certainly not 30%, right? But it would be a relatively nice move higher in a pretty good way for a lot of people. But this would just exacerbate a little bit more this bubble that a lot of people are suggesting that we're already in right now, right? It seems like the market just keeps going up every day. The market just keeps going up. Now, obviously, it does come down a little bit, but for the most part, it just keeps going up, right? It's not very sustainable. Corrections and crashes in the market are actually a good thing. I know a lot of people don't believe that and think like, oh no, we can't have a crash. A 10%, 15% pullback is not a bad thing. In fact, that's healthy. It's very, very healthy. What's unhealthy is the market keep going up every day or every week or every month. That is not healthy. That is not a healthy market. It shows basically massive speculation, shows a massive bubble, and it shows that, wait, buyers are way too extended. Buyers have deployed all their cash. They have nothing else left to buy, right? I mean, they have no more cash to deploy. That's a bad thing. When we see a pullback, we see some selling, we see some cash positions being built, and then they can come back in and rebuy, buy more, deploy cash again, right? So again, a pullback in the market is not necessarily such a bad thing at all. You should be looking at it as a good thing and an opportunity to get in a lot of cases, at a much lower price and valuation. That kind of makes sense, right? So anyway, we'll have to see here. Again, the only thing that'll tell us what'll happen is time. That's it, literally. Just time will tell us what'll actually happen here. But we've seen a lot of people over the last, call it 6 months, a year or so, coming in suggesting the second half of 2024, as we sit right here, the second half of 2024, have been suggesting the second half is going to be brutally ugly for stocks, the stock market, and everything, the economy as a whole. So here we are, bring it on. Let's do this, right? If we're going to do it, let's do it already. Let's stop sitting around. Let's stop twiddling our thumbs. Let's just do this already, right? Come on, let's do it. So anyway, that's my opinion anyway. If we're gonna do this, let's just do it already. Let's get this sucker over with, and let's see the massive crash and burn. I want to see this thing. Let's play it out, right? So anyway, I want to share with you the details really quickly of what I went reading about this. So I hope this helps you to some degree. Please, again, subscribe down below, share the video with your friends on social media, and like the video, all which are down below. Otherwise, leave a comment, question, feedback down below. Again, comment section right down below. Otherwise, check out the other videos here on the channel, the thousands in the video library. The ones I've hand selected for you down below in the description at the top of the comment section. And right now, popping up on your screen, you see videos there as well. Enjoy your day. Take care. Watch one of those videos next, and I'll see you again in just a little while.